Hi there, traders. Okay, now it's time to sort of switch on and really focus in on what's happening in the markets to get fully prepared for the opportunity around the US CPI numbers. Now, I'm focusing on those numbers because it's the raw nerve of the global markets, right? What the Fed have been doing, raising rates. We've seen a bit of a spike or a peak in the US inflation up around 9.1%. It's now coming back down. Last month was 7.7, and we're looking for 7.3. Now, just coming into it, right? You've got to work out what pairs to be looking at. Now, just looking at the calendar here, right? The economic events, we've got some final numbers out of Germany on some inflation numbers. Now, these aren't usually offbeat, so they're usually pretty much on the money. So, but just be prepared. If that is off the money, you're going to see a little bit of a move in euro ahead of the US numbers. Also, coming in, trying to predict what's happening. So when we're looking at a US number, right, we're looking at the major currency pairs in particular, equity markets, and then obviously some of the commodities, which are all generally based against the US dollar. So if you're looking at currencies, have a look. So what I'm saying is we've got the UK employment numbers coming out, right? Average earnings, claim account change. Now, historically, these are a big, robust number that get the market moving. Now, if you've got sterling doing something on its own, and then you overlay the US numbers on top, just be sure they're working together, not opposite. Otherwise, you can get some discombobulation, and it's an easy way to walk into a bit of a trap. You go, say, long US dollar, right, or short sterling, and you get really strong employment numbers. Well, sterling's going to be going up, so you don't want to be running into a bit of a major problem there. ZEW numbers, the ZEW numbers, definitely worth a look on the euro, whether the Eurozone. I've always liked the German numbers. They were a good historical reflection of economic sentiment. Right, now we come into like the hairy components. And what I'm talking about is the US CPI numbers. Now, as I said, this is the key number that the Fed has been looking at. They've been trying to get a hold of this 7.7%. Now, they look like they've done a good job on it. The other thing to think about, and this is through some good chat in the 247 trade zone, is looking at things like oil, right? Oil's come down a lot. Okay, so where it is at the moment, it's down to 74 bucks. The, that 10 or 12, $15 change is going to be reflected in inflation, a potentially weaker number. Okay, is it too early for that to come into play? It's borderline. I think next month we'll see a big drop off, but it may be a part of these numbers. Now, what we're not seeing on Metastock is the core ingredient, which is the actual numbers. So let me just come back to News Squawk and give you a bit of a view of what we've got. So the non-seasonally adjusted 7.3 is the expected number. Now, this is a little bit funny or a little bit odd. Even the range for the number is missing at the moment. Now, we'll update that if News Squawk get the details. They'll upload those and we can post them on the 247 trade zone. Previous number, 7.7, right? So that's where we're at. 7.3 is the core number. Now, there's a chance here that we could get a number slightly better than the forecast, but weaker than the previous number and still lead to a lower dollar overall. Now, let me just show you how that works. So once again, just coming back to Trading Economics, another great resource. 7.7, the consensus, right, in the market is 7.3. These guys who crunch the numbers, their forecast is 7.6. Okay, so just be aware of that. Now, that's just their own personal preference. Now, what was I talking about there with regards? So the forecast is 7.3, right? So what I like about this graph is it shows you that inflation has peaked and is now coming down. To me, all we really need, right, is a weaker number than 7.7. Ideally, around 7.5 or less would be ideal, right? And that tells me inflation's peaked, takes the pressure off the Fed of these aggressive rate hikes, and we get a lower dollar, right? The only thing we've got is the market is already expecting a 7.3%, right? So if it does come out 7.4, 7.5, we may see the dollar rally short term and then turn down. How far does it go? I don't know, right? You can never sort of really put an exact measurement on that. So just be aware that even if we get a slightly better number than 7.3, the dollar may rally momentarily, 10 minutes, 20 minutes, half an hour, and then turn down as the market goes, okay, you know what? This has definitely peaked inflation. They've got control of it, takes the pressure off the Fed, and no more rate hikes, so to speak. But what's our ideal situation? Our ideal situation is 7.3 or below, right? If you get a 7.2% print, it's below the forecast. It's well in line with the current trend of a weaker number, and you see a big clean out of the dollar, right? The only problem is if we get a 7.5, you're going to see the dollar pop, bit of discombobulation, and then I think lower. You want to try and avoid that situation, right? To me, there's only one real trade. I mean, well, there's more than one, but if I just came back and said, okay, so for instance, the number came in at 8%, well, the dollar's going to rally very aggressively. You know what? I don't like covering both bases here. So to me, the ideal situation, which fits in with the trend and everything else that's happening, is a number 7.3 or less. I'll be very happy with that outcome and a lower dollar. Bearing in mind, as these recent oil falls may lead to a weaker inflation number the following month as well. Okay, so that's where we are with the numbers. As I said, if we get an update here on the range of the numbers, you're probably thinking like 7.1%, maybe up to 7.8. That's probably the range. Okay, 7.3 being on the lower end of that. You know, once again, I may be underestimating the fall in oil, and that may give us a chance, well, really, to get something under 7%, and that would be, I tell you what, a hell of a move. Now, what you're going to see, if you haven't been looking at this all week, I mean, you should have even been staring at the screens, right? I mentioned this earlier in the week. Like these things, when on big numbers where everything is on the line, I'm just looking at the major currencies here, they will go into a sideways moving market and wait for the numbers. So the market is on hold, right? There's no need to get involved unless you're looking at the German numbers or the UK employment numbers. If anything, I'd say wait for the US numbers if you can, and that's where the action's going to be, right? So it's a pretty easy one. All these majors will be in play, and you've got pretty good technical levels on all of them, right? So don't think you're going to find it hard to sort of work out which ones to hit. I mean, as it is, the dollar index, euro right at those levels, gold trading sideways through that level, oil still continues to the downside. And equity, see how the equities, the Dow Jones Mini and the NASDAQ have traded sideways. They've come down, traded sideways through that support trend line, and are just waiting for the news to drop. Same with Bitcoin, right? So that's where we are with the major components. Everything's on hold. Everything is to play for, right? This is the key number that we've been waiting for is what's inflation doing, right? As I said, if it peaks and tops out, well, you got a nice dollar move to the downside. I mean, I've got to cover it. If it comes out above, you know, definitely back at 7.7, 7.8%, we are going to see a really crazy, aggressive dollar move to the top side, right? Equities will get crunched again, and the euro, sterling, Aussie, Kiwi will fall to the downside. Now, this like me, you can sort of, with the anticipation, I mean, I was going to say you can sort of tell with the tone of my voice, but you can imagine like the whole market is geared up here. This is the final, well, confirmation number that inflation has stalled and is coming back down towards that, you know, potentially towards that 3% level. If this is thrown out of whack by a number back up towards 8%, which, as I said, it's a bit of a far-fetch because we've got oil falling dramatically, which is a major part of inflation, and all the other components of the US economy, just about all of them cooling off. All the numbers have been weak. It's got to come in weaker. But for whatever weird reason, if it came out 8%, it's against the trend. The market is already short dollars. Even though we're waiting for the confirmation to really rip into it, we may see a big aggressive move to the top side. I think it's totally I don't think we'll see it, but this is the way we want to go. It's the easiest path. And as I was just saying there with the major currencies, if I just flick back to those, you'll see that we do have like some pretty good levels to be getting short, right? like all these major currencies, Aussie, Kiwi, Euro, Sterling. I mean, you're also drawing trend lines here on actually also dollar Swiss. But you're also, drawing trend lines there. Sorry, they're on dollar yen. I'm just looking at the charts and thinking of all these different options. But the dollar falls. You're going to see moves, obviously, to the top side, just to make it very clear. Weak US numbers. These all move to the top side. And the dollar pairs move to the downside. That's the way it should rock and roll. All right. As I said, any numbers up towards 7.7, 7.8, it's going to be a bit of a dog's breakfast, but it will be very aggressive. And I actually don't want to be a part of that. All I'm looking for is the comfort trade, which is that move to the downside. All right, guys, that's it from me. Good luck. Just remember, on these opportunities, it's not just an opportunity to, to go all out with a massive trade that's going to blow your account up. Just work out what you can afford to lose. If you've been making money, you're going to have a few extra bucks in there as well to put on the trade. Pick your side, pick your entry execution method, and then let the market do the work for you. Good luck. All the best. Cheerio.